You're listening to Built to Convert, the podcast where growth-minded marketers, founders, and creators come to level up. No hype, no guesswork, just bold insights that drive results. Let's go.
Welcome to Built to Convert. I'm Tyler Lane, founder of Session Interactive. This episode is part of our credit union specific series where we focus on how large, complex financial institutions actually drive growth. No hypotheticals, no brand platitudes, just real decision-making marketing leaders who have to make when products are commoditized, regulation is heavy, and performance still matters. This episode is brought to you by Session Interactive. We are a performance marketing agency that works specifically with financial service organizations, including credit unions, banks, and other regulated financial brands. Our work focuses on acquisition, analytics, and long-term member growth, helping marketing teams grow responsibly while proving ROI inside real operational and regulatory constraints. Learn more at sessioninteractive.com. All right, guys, continuing the series here, we have Pam Piligian, Chief Marketing Officer and Senior Vice President at Navy Federal Credit Union. I probably butchered that last name already, Pam. Gosh. Pam leads marketing for the largest credit union in the country, serving more than 12 million members and overseeing brand, product, and service marketing at massive scale. Before moving in-house, this is what I like. I love the agency background. Pam spent nearly 2 decades on the agency side, which gives her a rare perspective on how marketing actually works for both sides of the table. Today, we'll talk about growth, differentiation, and accountability, and how that really shows up inside a modern credit union. Pam, great to have you. Appreciate it.
Thank you, Tyler. It's great to be here.
Yeah, awesome. I know you got 1 or 2 things going on, so we'll make this a good use of your time, hopefully. All right, Pam. So I think, my point in your introduction, which I've really been impressed by you, is the marketing acumen and the background. Obviously, if you're going to be CMO and that level, you need to have that. But in particular, it's that agency background that you brought to the table. What do you believe as an agency leader that you had to unlearn when you moved in-house? I think that's the big thing, right? Is our perspective as agency leads, and then we go and brand, things change dramatically. What was some things you had to unlearn there?
They do change. And for me, the learning shifted because I loved my time in the agency world. You get to work on a vast array of brands. So I worked on packaged goods. I worked on banking. I worked on some nonprofits. I worked on some insurance accounts. So big portfolio, and particularly with a lot of work in consumer packaged goods. That said, coming client side and to a credit union and to a service brand, our point of difference really is about how we serve. We have 15.1 million members now, and products can be the same at lots of different places, but the point of difference really is the service. Whether it's 24/7 access to our stateside call centers. We answer about 1 million calls every week. So that's big, as well as digital banking, which obviously is our largest channel, and our branches. We have branches across the United States. But when you think about it from a marketing perspective, when I was on packaged goods and I worked on Nabisco, I worked on Raid, I worked on Ocean Spray, the product, the usage occasion might change, but the product doesn't change. Whatever you buy at the grocery store, drugstore, mass is the same. Banking is very different. It's really about that service. Yes, we're promoting products, but that service really is the point of difference. And it can look and feel different depending on who you are. If you're buying your very first car, your very first house, you're learning how to responsibly use credit. There's a lot of education that goes with that. Not so much when it's a packaged good and everybody pretty much knows how to use and consume, whether it's juice or crackers or whatever the case might be. So I think for me, the operationalizing side of it and operation side of the brand was a game changer. And thinking about it from a marketing perspective, I mean, even if you think back about our tagline, our members of the mission, how do members feel that? And the answer probably varies 15 million different ways and what's important to those people. So being able to look at the brand message and how do you operationalize it across all channels and make it an omni experience for our members really is a game changer. And it's a lot harder, I have to say. I used to think about from the agency side that we had all the hard part, and I think the clients really have the hard part jobs.
No, you're absolutely right. And I think it's a naive perspective that we have as agencies, not to dwell on this too much, but I think, do you think that's it's most understood, just to expand upon your point in terms of just the sheer amount of work and the sheer amount of internal components and things like that you need to prioritize that are not always fixated on direct marketing activities?
It is, and it takes it takes a lot of humans in the channel to make sure that we're delivering what we've promised. Definitely. And if you're manufacturing a product, that still is a lot of humans too, but there's less touches. And the consumer sees fewer of those human touches than they do when they're buying a service from you. So making sure that we're consistent across all of those in a way that's meaningful to whomever we're speaking to and marketing to really matters. Less variance on the CPG side.
Yeah, exactly. Let's switch gears slightly. I mean, I think you mentioned it in terms of when products, rates, and fees are table stakes. Where does marketing truly influence outcomes? I know we're really fixating on member experience and those components and making sure providing knowledge and insights to individuals as they go through large or complex or simplistic financial decisions. Where does marketing come into play outside of some of maybe the obvious areas?
Well, I'm a little biased there because as the CMO, I'm going to think marketing comes in all of it because we really are building those expectations as well as that preference, as well as the awareness. So we're really taking everybody through the entire funnel. One thing I'll start with is I do think credit unions as a whole, because we're nonprofit and we're giving back the proceeds to our members in the form of better rates, better fees, more service channels, more delivery. I think there's an accountability between credit unions and their members that doesn't exist with lots of other just brands in the universe. That said, I think it's marketing's job to tell that story. And we talk a lot about Navy Federal in the context of talking about our value, the value that we deliver to our members, which is our savings in the ways we talked about, as well as our values. And the values often come from the people that we serve. And whatever your defined membership is, how you're really what you're doing unique to them and for them, and how you're showing up for them consistently throughout their journeys.
Excellent. I love that. And I think just in keeping with that theme too, it's brand, right? It's becoming, I wouldn't say it's ever been devalued, but maybe in certain cases over the years with kind of immediate gratification channels like paid media and other components that are just getting leads in and converting them. But now with large language models and a variety of other things, brand has, at least in my eyes, taken a front seat, if you will. And that said, but how do you justify that level of brand investment and that awareness? I know you guys do a ton of events and sponsorships and things like that. When rate-based competition is relentless in the space, right? And, as you're going, again, as I mentioned, even simplistic or complex, a new home or a car, you're looking for that rate. So how would you justify that spend allocation?
Well, we do justify it and we also measure it. I will talk a lot about, and I really believe it, there are metrics that matter. And some of the metrics, one of the metrics that, yes, we measure awareness, yes, we measure preference, but the thing that we really measure, that we really focus on, is trust. We earn trust by using our marketing to make promises out to that member and to that prospect on what it's like to bank with us. We also earn trust, and it is part of marketing, is being able to show those third-party reviews. What kind of product reviews did our members that are using these products and services, how did they rate us? And how can we make that information visible? How do we use influencers to speak to our prospects? And all of that's important, and it's all part of the marketing mix because everybody makes their decisions a little bit differently. The thing that has happened in the country in the last couple of years is satisfaction no longer is an automatic earning for loyalty. We have to earn loyalty and earn trust every day.
Mhm.
And that happens by doing what we said we were going to, showing up in ways that you expect us to. And sometimes it's not marketing to you a product. It's about telling you how we could help you. For some of our newer members, that might be helping them with a credit score and giving them a free tool that they can use to monitor it and showing them how they could do scenario planning on how they could impact it. That education is really part of the journey and part of the relationship. We talk a lot here about marketing is not just promoting sales and products. Think about friendships and think about relationships you have. If every time you called that friend, they said, hey, can I borrow money from you? Or can you buy this from me? Or they were always asking for you and never pouring into you what you really needed. You probably aren't going to keep that relationship very long. And the same is true with our members. I mean, we really need to show them full circle how we're there for them, which is about making sure they're growing and they're healthy, helping them with those products and services, helping them with affordable banking products and affordable credit products. It's the full range. So marketing has a role in each one of those, but the role changes. Sometimes the objective is just about education. Sometimes it's about earning the loyalty. Sometimes it's about earning the trust. And then other times it is about a product. But the full spectrum is really important. You can't overpronate on any one of those and really have an engaged member.
Exactly. Yeah. And I think it's just which makes things difficult, right? Because there's a lot of different segments and different aspects of people evaluating their financial decision or financial institution that they're going with. I think, what signals tell you if someone's looking specifically just at rates, they're rate shopping versus they're looking for maybe open to a broader relationship? Because I think, again, I'm going back to those the things that I've been through as a consumer of, what's the best rate? I don't really care the financial institution, but when I actually think about it, okay, maybe I do. And I really do want to have a relationship, and I don't necessarily need all of the specific financial advice, but maybe a steward and knowledge and resources that I know I can go to empower myself to make those decisions. So I guess what indicators versus, someone that's just rate shopping versus this broader relationship?
Well, there's a couple of indicators. When we're marketing to our members, we can use their own data to help us determine that. We will see a member who may buy a car. When the rates drop, they'll refinance. They'll refinance with us. They'll refinance, because we know that they're always in the market looking for those new and better rates. And we also will see members who set it and kind of forget it. But those members, we also will tell them, here's when you can get a better deal, or here's when you should be in this product. We have some members who sign up for the wrong product, somebody that's active duty and signed up for a non-active duty checking. And we know that there's benefits they could get in terms of simple refunds and rebates. So we'll contact that member and remind them, if you shifted this account, you could have actually saved this money that you spent. So we do those things that really show them that we're looking out for them. And to your point about the education, it is a challenge to right size it. Some members really want just tell me what to do. Give me the list, give me a checklist. So we will do things, I'll tell you, for active duty, for PCSing, which is permanent change of station when our members are moving. We have a checklist. We also have educational presentations that will be used in the branches that go through lots of checklists and what to expect when and how to get settled in your new town, and talks about newcomers. And we'll also help with a partnership that we've done with Blue Star Families relative to those spouses and employment. So it's much broader. So we try to right size the content for the need and where somebody's at. Most consumers are not looking to go and get their PhD in banking. They're looking for, how do I make the best decision on this particular product right now? So we try to serve up a lot of those, what we call snack side bites, as well as the longer form for people that really do want to dive in and learn more and got the time and the interest to be more involved in their particular needs at the time.
Sure. That theme on trust is impressive, Pam. And I think, too, is just that immersive experience that you're providing. And probably individuals are unaware of the amount of information that you're willing to share and direction that you're willing to provide, right? Like relocation is massive, and what to look out for and things like that. That's some serious added value. You're building that rapport with those existing customers or potential customers. So good on you. A theme that
we don't always get it right. I will tell you, we've developed a segmentation where we profile our members based on what we know about them and what we can see about what they've done, both on us as well as off us, these profiles. And we have 6 different personas. And there's times when we are not right, and we will try to learn from that. We have this program where we can call it Insights, where we're telling a member something we know about them, that we've observed about them. And the metric that we get feedback for is really a thumbs up or a thumbs down. And after a while, if Tyler has given us a thumbs down on every single thing we've talked about, it's like, okay, we're off. We've got him in the wrong profile group. He really cares about different things. We do talk a lot about when our marketing is working well, we are doing what we call listen loudly. We're listening to those various things that you've told us with your thumbs up, thumbs down, or the fact that you didn't engage, or the fact that you've opted out of something. So we're trying to also listen for those negative signals so that we can better serve you. So it's not always perfect, but the more we can listen, the more we can fine tune along the way and continue to optimize it.
That market research piece, right? That ongoing just data and those profile building tools are essential just to judge sentiment and just like, is this even a value to you, right? So yeah, spot on for you guys. And I know easier said than done. Absolutely. A theme that I like to get into with a lot of our financial institutions, in particular credit unions, is the differentiators. I think, I'll plead ignorance. Years ago, I didn't understand the difference between credit unions and banks. And I never, and then fast forward, it's funny, the line in the sand between the two, and the competition and certain things. What would you say where credit unions unintentionally copy banks and lose what actually makes them different? Where would you say that comes into play typically where you've seen?
Well, I see it sometimes when I will say, sometimes I'll see it where I think in my mind, I'll think this person lost their way. We are different. And just like you, I didn't know the difference either. My dad was a Marine, served right out of college, served during the Korean War, then left the Marines, got married, and started a family. So when we were growing up, it's not like we were part of a military family. It was always part of the respect we had for the military, but I did not grow up in a military household, and did not belong to a credit union. I did not know what the difference was. The story I tell, which is I'm embarrassed to admit this now, given that I work in banking all these years, but my parents had moved when I was in college, and my car insurance needed to be renewed. And I went to a well-known national chain and renewed it. And the gentleman asked me, do you want to pay for it now, all of it, or do you want to pay for it quarterly? And I'm like, quarterly, sign all the paperwork. I get home, and at this time, it's a long time ago, I mailed it back, and my dad calls me and he said, Pamela, and you financed your auto insurance. And he's like, what happened? And I'm like, Dad, he didn't say that. He said, do you want to pay? So I think we've all done made those mistakes where we just didn't know the difference and we didn't know the right questions to ask. And I use that story because I think the same is true with banking and credit union. Credit unions give back to their members, and therefore we're very focused. Our members are our stakeholders. So we're focused on serving their needs, earning their trust, building products and services for them. So it's much more of that community orientation versus banks often are doing the same for their shareholders. And their shareholders are the general public, and it's a broader group. So I think credit unions really are doing the right thing for their members when they keep that focus. Our marketing tagline, but it's also bigger than a marketing tagline, is our members are the mission. And that reminds us, everybody that works here, that the members are really who we were founded to serve and how we can serve and do that. And that's very different than a bank. And the more we can talk about and educate people, the difference between the credit unions and the banks. But also letting them know that they're not giving up the goodness of financial stability, full product services, digital channels. A lot of the things that they may or may not know that credit unions provide are still there. But look for what's different, look for what's better. And I think the whole knowing that they can be part of a community often will resonate with most.
Yeah, absolutely. And I think that's a big piece. And I know within a lot of just decision making that people are going through and what do they want to be a part of, honestly, which is really important. Let's go into kind of the more marketing aspects in terms of kind of acquisition channels. 2025 was an interesting year for a lot of companies and brands collectively. Let's say, Pam, in terms of acquisition channels and messaging, which do you tend to prioritize when budgets are really under pressure? You mentioned influencers are really working well for you, which is amazing. I know everyone's should be well aware of your brand specifically, but yeah, talk to us about some of those individual channels or channel groups or mixes that have worked really well for you, and you would prioritize when budgets are a little bit thin.
Well, I'm glad you said prioritize because we're all stretching our dollars and making sure that those dollars are accountable. A term I often use here is I'll talk about brand performance, and it's brand and performance together. People have to know you, and that often is going to be driven by some of your mass media and your channel. And the most efficient reach often is going to be the broader communication mix. So I will try to prioritize those. That said, prioritizing where we show up matters too. 50% of Americans are eligible to join Navy Federal, either via active duty parents, sibling, grandparents, somebody that they're connected to, or they are active duty themselves, or they're a spouse of active duty. So every dollar we spend talking to someone outside of that is not an efficient dollar. So we really try to focus on, for us, we'll look at active duty, will overweight the viewership in those markets, so we get a sense of where they're, what they're watching. And the same thing with veterans. I mean, we have a military appreciation partner with the National Hockey League, and we got there by finding that a lot of veterans are big hockey fans. Also, hockey skews a little bit younger because it's millennials and it's a fast game, and so there's a lot of good eyeballs there. So for our first dollars we always spend is, I call it chasing the eyeballs. So following where the eyeballs are and where people are watching and engaging. Often sports people are still doing is family viewing. They're doing a real-time viewing. So there's like the best quality eyeballs there. And then we're using a lot of standard performance media. So whether that is direct mail, people might say that's rather old-fashioned, but I will tell you one of the things that we've done for our veteran acquisition, we have a veterans direct mail program that's very successful. And I think part of that is when I say all veterans are eligible, it's different than when I say, Tyler, as an Army veteran, you are eligible. And here's what we've got for you. And each one of those pieces will serve up 3 different products because I don't really know exactly what you're in the market for.
Yeah.
But it's more of a personalized approach. And then we will use email often as that second touch. So some of that will weigh both the reach as well as how broad is this, how efficient is it, and then how does it perform for us. One of the things for television that we monitor is our website traffic in conjunction with these national media events. And we do see that it jumps. So that's a correlation there. Now, I can't tell you that every single one of those people are driving to the branch and signing up or calling us and signing up or going online and signing up. But I do know, and then we measure then how they feel about the brand. What's our brand reputation and is it growing? And then on the acquisition side, we're really measuring intent. Did people look at this as well as did they go on to acquire it? And not every piece of communication, not every piece is going to be a one-to-one on, think about it. It's not like you heard a radio ad and then ran out and bought a house. You were probably already in the market for a house. And we were using that radio to talk to you while you're out looking at them, to talk to you about how we could help you finance it and get into that beautiful first home. So it really is about the mix and optimizing the mix based on the member and the product and their journey, where they're at.
Exactly, Pam. And I'm glad you you mentioned some of those traditional avenues and channels, because I think it's important. I think, speaking for myself and our team specific, selfishly, it's just, we're not always aware or understanding of those channels, but we respect and know that there are so many different touches around awareness, and something could resonate, and an offer, and it doesn't have to be paid lead generation. Individuals need that awareness, and then ultimately will probably conduct their research online. So attribution becomes difficult, especially in the age of these large language models and many other things. And have been difficult for many years, right? As you know, with some traditional advertising metrics. So yeah, I'm glad you guys are prioritizing that, of course. How do you think, I guess, unpacking a little bit more about education-based marketing tactics as you're, going through those to try to empower individuals to learn more versus direct response when growth pressure is high? Okay, you got to hit this number, Pam. We had a down quarter in particular. What are those efforts that you would really want to fixate on? It's like, how do we judge and prioritize budget allocation at that point?
Well, I think it's, unfortunately, the answer is yes. We do it, but a lot of different ways. I'll give you an example where sometimes you just have to stop and think about it from the member's perspective. We are over 90 years old. We're known for our good service and our high satisfaction rates. Our members are very engaged, tend to stay with us for life. We measured for a long time always about the member satisfaction with the products, and we would use that data to optimize the delivery and to maximize what we were doing. But when you think about that, that helps us. It helps us do a better job. It doesn't help you as a member or prospect from a search standpoint be able to see any of that. So we turned on a tool through Trustpilot where for 13 different products and services, we literally collect emails from the people that are using the product and service, have them rated, and it's public. And I think if we didn't know that we had a good story there, we might not have been as comfortable about doing that. But being able to have that transparent look for everybody to be able to see across the products and services has been a game changer. Operationally, we didn't do anything different. We just changed it where you could see the data and we could prove it to you as a doubting, or just maybe unknown.
Well, the credibility, right?
And the credibility then became from peers and, people that you could see the fact that you could rate this product and service. As you might imagine, from a military credit union, it made some people nervous. We weren't getting 5 out of 5 stars for everything. It's like, well, we have 4.7 out of 5, and that's good. And having people embrace the visibility and the transparency was part of that journey. But part of it was, originally people were like, well, we have good SAT scores and we tell people that. And you're like, well, if they don't believe us, how do we prove it? Which is why we turned on that program. So I think part of it is kind of stepping back and saying, how are you earning trust? Not just saying, trust me, but how are you actually earning it? And for this person who is new to the product need or new to the category in terms of new to banking, how are you showing up as a brand consistently to make that point? And often when you're optimizing against budgets, you might only be focusing on the last part of the journey. It's really difficult if you're only focusing on the last part of the journey to win the entire process. You're too late in the game. And because of our relationship orientation, I'm really blessed here at Navy Federal Credit Union. People get that. And our team really says, how are we helping educate people? How are we helping engage them in the right products and services, not just the next product and service?
Excellent. I love that breakdown. I love to just, not love, but I think it's intimidating for a lot of brands to open up some of that user generated feedback, right? This isn't just a Google business review. This is Trustpilot, like breaking down a lot of core products and services. And hey, my experience with Joe Schmo at a bank or at the location, the credit union location wasn't great, right? So I think that exposes a lot of things. Would you agree that there's reviews and user-based generated comments are scrutinized, and there's a lot of skepticism in terms of how legitimate they are in this day and age of AI and a lot
They
of
are scrutinized, and I also think all in all, overall consumers are a little more informed. So we had this happen during COVID, and we were serving people in the branches, but only the number of people that could match. Well, we could practice social distancing and have people in there safe.
Sure.
So we were letting fewer people in the branch. So we were running queues outside. And some of the comments were like, it's really hot in the parking lot. And people are posting that. And it's like, yes, it is really hot in the parking lot. And we can't do anything about that. But I think if we were trying to take down those comments, it would have felt like it didn't matter that it was hot in the parking lot. I mean, it does matter. We noticed that you're not comfortable waiting out there, but we're doing the best we can in order to be able to serve you during these conditions. So it is about being more comfortable with the transparency along the way, knowing that real often isn't perfect, but everybody's doing their best.
I think that is true, right? If you had a perfect 5-star and 5,000 reviews, there's a lot of red flags or immediate skepticism. So yeah, when you break it down to 4.6, 4.7, it's like, oh, okay, there's some legitimacy here, and there's not some maybe false combing through these negative reviews to remove them, which is really important. Let's we're mentioning tools and technology a little bit, Pam. Let's transition into that theme in terms of how you evaluate new platforms or technologies through that mindset of growth and maintaining your mission at all times. We know what's happening with AI. I mean, there's a lot of happening, probably new things have happening since we're on this call. And people are researching things differently, and people are expecting things differently. How are you reviewing and prioritizing those platforms to make sure you're adhering again to those growth and mission goals, and making sure again you're adhering to what your members really care about?
Well, it starts with the mission. So we start immediately with are our people there? And our people is really veterans, active duty, and their families. So we will look at everything we can to kind of quantify that audience. We will also look at context. Who else is there? And then we will look at kind of past performance, like what do we think that is viable for that particular platform as we set the objectives. And the other thing we do is, let's face it, you can use data, you can use technology, you can use a lot of good information to make a good informed decision, and then not always have the projected outcome. Mm-hmm. So because of that, I set aside a certain percent of my budget each quarter to test new. Great. And I shared that with our CFO, I shared that with our COO, and I said, some of these are not going to work. And if I come to you and 100% of them work, I'm probably not testing broad enough. So A, it's not going to be the majority of my budget, but B, it is going to always be on because our consumers changing, media is changing, data is changing, and if we're going to attempt to keep up with that rate of change, we've got to keep our pulse on what's happening. And the way we can do that is be always on with testing. So there have been times when I've had to say, we tested this and it didn't work, or I don't even know if it worked because there wasn't as much performance behind it as we thought. And, then we can optimize against it and change it out. So that always on and being willing to embrace failure as part of that always on mentality. And you've got to be able to do both. If you're always on, but you're not willing to embrace failure, then all you've done is trying to figure out how you can spend more. Where for us, it's really an investment. An investment is an expenditure with an expected return. And I owe it to you and to our members and to our team members to be able to articulate what that expected return is.
Excellent. Yeah. That's embracing that fail forward mentality, Pam, right? And knowing that I love just the progression I'm hearing from you, just in terms of like, yeah, there's some shiny things in the corner, and we'd love to test them, and maybe we'll test a couple of them, but by no means are we going to dedicate a large percentage of the budget just yet until they're proven, and we can see some of that. I guess from that, I think where do you feel data genuinely informs decisions, and where do you think it maybe hinders or gives the teams a false sense of certainty, Pam? Because again, we're talking about it, right? Like traditional and other aspects, large language models and attribution is becoming again far more difficult than it once was. Where do you feel that again, that data will inform decisions and you're comfortable with it? And where do you think it has that kind of false sense of security or certainty rather?
Well, I'm a data nerd. You probably can tell that a little bit by listening to me. So I love good data. And I did not create this analogy, but it really resonated with me. Somebody talked about data as, think about it as the ocean. It can be so empowering. You can get much further on big waves. It can also just drown you, and just beat you. So you want to make sure that you're using it for good and propelling you. I think data-informed decisions and data-driven decisions are sound. I've also learned that there's times that data makes you think that every consumer makes a decision in the most sound way. Mm-hmm. And that's not always true. So using the data to round out the whole context, let's face it, often people's decisions are impacted by how they feel. Data is really weak on telling us, outside of sentiment data, how people feel. So the more we can do to listen to things and put it in the right context, the better off we can be on that. But that does take a lot of kind of guessing to figure out some of that. So using data to inform the decisions, it might not always be able to drive the best decision, but if it's informing it, then you can make a good strategic bet on using your data to make good decisions.
It is that healthy mix, right? I think so often me coming up, I'm talking about my story a little bit, but just around fixating on the quantitative data almost entirely. And then realizing like, this isn't even like, this is a percentage of the story that's happening and not influencing the qualitative metrics or infusing those metrics nearly enough. And I think it is that healthy mix that, and that kind of directional visibility in order to make decisions and trying to get as much insight, but also realizing, I think from your agency days too, and probably this resonates, is like just functioning on imperfect information to keep it going and to show that real value.
Exactly. I will tell you one of those decisions, and this was in my peer that runs the call center. We measure member satisfaction from the call center utilization. We do not measure how long a member service rep is with a member. And the reason we don't is when we piloted that, sometimes it has unintended consequences. And I'll give an example. Everybody on our executive team spends time out in branches seeing our team members there and our members there, as well as time in the call center. And I was in the call center a couple of months ago, and our member service rep asked the member, is there anything else I can help you with? And the member said, yes, I have a question. Does the post office still sell stamps by mail? And I'm sitting next to this member service rep, and I have a headphone on. I am fully ready for her to say, sir, we're really not part of the post office, and I don't know. Instead, she pulls up a browser, Googles, does the post office still sell stamps by mail? The answer, by the way, is yes. And she was able to say, Mr. Lane, actually they do. And I'm going to send you that link now on how you can order stamps by mail. And she hung up, and I just said, because the metric for her was about member satisfaction, it wasn't about time on the phone. She wasn't antsy about how fast can I end this call and not have to answer the call that's not really relevant to my business. She was really interested in how she could help that member. So I tell that story because I think unintentional consequences could have been if the metric really was time on call and her performance was measured on time on call. I bet you she would have had a different response to that member. So I think for all of us as leaders, part of that is just examining the metrics you put in place. And are they reinforcing what you're asking your team members to do? And if they're not, then how do you adjust them?
Yeah, excellent point. Yeah, and I think that's just, again, that just proves what we've been discussing. Absolutely. What, Pam, switching gears a little bit slightly just around marketing messaging, I'm curious on your end. I think, there's a lot of a sea of sameness, right? And it's a struggle in certain cases to differentiate on a continuous basis. How do you prevent purpose-led messaging from being too generic or too safe when you know you need to push it to differentiate or push it to really prove to prospects or existing members too that you're you're here to stay and that you're really focused on them and what they have going on in their lives?
First and foremost, it has to look and feel like it came from us. So, and I'm a little bit of a maybe you could call me the brand purist on that, because I remind our team members all the time that our share of voice in the financial services industry is 3 to 4%. So for every 3 to 4 pieces of mail or communication that a member hears from us, or a radio commercial or a television they see us, they're hearing 93 others from another FI. So as soon as we look different every time we show up in one of those 3 touches, there's no way they're going to remember it's us. So first and foremost, on that sea of sameness, I want the sameness not to be the sameness to other financial providers. I want it to be the sameness to us. Yes. Thank you for showing active duty in service. Thank you for recognizing what a veteran does. Thank you. Even though sometimes when you think about a veteran utilization of a credit card, probably is the same as lots of other people.
Of course.
So how do you still make sure that it's unique to you and it does look like you? And how do we have these clues and hints? So my first charge is always like, how does it look like us? It needs to look and sound like us. And hopefully, if you're a member of ours or if you're a prospect of ours, you know that and you know what to expect. So yes, it's the same colors, but it's the same tone. It's the same personality. I'm really a big believer in that continuity. And then the second part of that is really just making sure that we're talking about the things that matter. I think sometimes we can chase those bright, shiny objects and they're not important to the member. Versus focusing on what's really important to them and talking about that.
Yeah, those situations, those day-to-day items that they're going through. Yeah, consistency, continuity, that's so essential and easily fragmented, I think, too, as you're bringing on partners or internal teams are focusing on email and this is on search and this is TV. I think it's tough sometimes to keep it that level of consistency across the board and so many channels that you manage.
And I'm so glad you talked about partners, because we can't do everything that our members need by ourselves. So we have extensive partnerships, and I will take, like USO is a big partner of ours. The Bob Woodruff Foundation is really big. So when you think about both of those, who do they care about and who are they really serving? Veterans. And that's who's important to us. So we've made sure that that's a point of continuity too, so that the people we show up with care about the same folks that we do. And that helps in terms of that unification.
And that aligned mission for sure. Pam, it's been an absolute pleasure. Let's wrap up with a couple more questions here. Love the insights, and I really appreciate how in depth you're going, and definitely the data aspects are coming out, which is great to see. Hey, let's put a question out there. A little foreshadowing, a little future state analysis perspective from Pam here. Looking ahead 5 years, what worries you about, what worries you more in credit unions? Irrelevance or inefficiency?
Well, you can't be irrelevant because you're not going to survive if you are. And you also can't be inefficient and survive. So both of those are really important. I think the relevance really worries me most, because I think if credit unions lose their way and it's not clear who they serve, then they're going to lose their relevance and they lose that point of difference. So I think being continuously showing how we're investing, we are making life better and easier for our members. We are delivering against affordability. And continuing to remind our members about that throughout their journey is really important. But doing it in a way that's efficient too, because we've got to be good stewards of the dollars.
Excellent. Yeah, I love that. And I think that's just, so apparent as we continue to progress here. One additional one, I think, let's say, kind of secondary question here in terms of what decisions are credit union marketers going to wish they made sooner? I think also, and I get like positioning yourself. Let's say you just got the CMO role today, right? And fast forward, you've been in this role for quite some time. But what's something I guess maybe you wish you made sooner that maybe took you some time? I know transitioning from agency into a brand is interesting, right? It's not always the easiest transition in certain cases. But yeah, maybe answer that one. I'm curious.
I think the one of the things it's like the fast forward. What if you had a time machine and you could fast forward your learning? What would you have learned different and better? And I think for mine, it kind of goes back to one of the things we talked about up front is I got it. But when I first came here, I didn't realize how it's not only important, it's imperative that we work horizontal. And very few of the programs that succeed can just be developed in marketing and rolled out. So really lock arms with your delivery channels and your partners because it matters all on the way. I spent some time when I first got here. We went through a government shutdown, and the Coast Guard was new in our field of membership because they don't report in through the DoD. And I was, as we prepared, we have a payday lending assistance program where we will pay our members their pay during the shutdown time period. So as a newbie, I spent some time outside outside of work hours, spending time thinking about with our management council how I was going to support the fact that we should include the Coast Guard in this analysis. And Tyler, I went to the meeting, I had my notes ready, and guess what? Not a single person around the table had that question. Our culture was like, of course they'll be included. It was all about how. So I had spent my time preparing for the wrong part of the meeting.
Yeah.
And so I think in my fast forward, I would have thought more a little bit about like, what is that? What is our culture? Our culture's big here and you feel it. It's not very well documented though. So you feel it more than, so as a new person, sometimes it's hard to determine some of those business decisions that will be slam dunks for everybody and that you could not have to spend as much time on. So I think I would have figured out how to fast forward some of that so that I could have been a better participant and a better peer with my fellow leaders quicker.
Some great stories, Pam, and an amazing perspective as you kind of reflect on your tenure there. Really appreciate your time, energy, and passion as relates to credit unions and marketing as a whole. Pam, where can people engage and interact with you? LinkedIn, other resources, and of course Navy Federal. Where can people find you guys?
Yep, I'm on LinkedIn. I'm also one of the last people I think still on X at Pam Piligian. So either one of those are good platforms. And Navy Federal, we're headquartered here in Vienna, Virginia. We have a big operations center in Pensacola, Florida. A significant number of employees also in Winchester, Virginia, right up north of me. But really happy to be here. I think for credit unions, the more that we all lock arms and really focus on our members, the better off we'll all be. And I think we'll be able to, with that mission and vision and purpose in mind, I think we'll really be able to make a difference for our brands as well as for the communities that we serve.
Yeah. And that's something that's so clear, again, as we continue to work with credit unions that I've witnessed is that community feel and that just helping each other out and not positioning. Maybe you'd be a competitor or indirect. It doesn't matter. We're going to help each other out collectively because we want to benefit the greater good. So awesome. Well said, Pam. Appreciate you. Thanks so much.
Thank you. Appreciate it.
Thanks for listening to Built to Convert. If you're serious about growth, don't just listen. Subscribe, leave a review, and follow us for new episodes that drop straight into your feed. Until next time, keep building.